Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, February 13th, 2012 is sponsored by Realtick. Alright guys, let's get into the mix today. Markets are trending neutral to higher again. We have a nice float after a solid gap up and then a sell-off. The markets again regain their composure and move higher throughout the rest of the day. And you can see this very, very clearly, folks. This is a pattern that has replayed almost non-stop for the last 6 weeks, if not longer, where again, early morning when there's volume, the selling does come in. You can see a little bit of extra volume this morning. Just like every morning, there's a little bit of volume. Therefore, the market sees some selling. And then once that selling subsides around the beginning of lunch, late morning, kind of 10:30, 11 o'clock time frame, and the volume disappears, the markets will float up. And that's exactly what has happened again today. And if I zoom out on the chart pattern, you can see this pattern repeating over and over again. Obviously, Friday was an outlier with the news out of Greece that was fear that the austerity measures might not pass. Obviously, they did pass over the weekend. But if you go back to Thursday, look at this. Downward move in the first hour or so of the day, and then a float higher. And then again on Wednesday, downward move and a float higher. You can just go back and you can see these patterns repeating. Here's again, going back the next day, downward move, float higher. And even going here, early morning gap down, float higher. Here's a open up and then a float higher. So this continuous nature of the market where the light volume is just very manipulated. Ultimately, the buy programs come in. You could make a case for POMO, permanent open market operations, having an impact here. Or you could just say flatly that there's a positive feeling in the markets right now and the retail investors slowly going into the markets. I mean, all of those are valid points and they all hold true. It all yields that late morning float up for the rest of the day, and that's exactly, again, what we're having on today's chart patterns. So again, as the markets are trying to break through this gap fill, and this is an interesting little area here because the area where we opened this morning was gap fill from Thursday. So Thursday closed right there. Friday you had the big gap down. Today you gapped up right back to that same level you closed at on Thursday. That was obvious resistance and actually a great shorting opportunity. The markets fell beautifully, came down here just around this general 200 moving average. If you take this trend line right here, see the closing basis of these couple candles from Friday's, make that Thursday's action, draw a trend line right across and you actually get the exact low of the day today, and that's why that pivot point was put in right there. All right, and again, if I just get that in perfectly for you right there, you can see the exact low of the day here, matching with the closing pivot points on Thursday's action. And sure enough, as you can see, upward move, little consolidation into the 20 moving average, and then a continued move. And right now we're kind of fighting with this gap fill from Thursday's close, whether or not we're going to get above it. Based on the light volume, I would generally say yes, we will. And ultimately, your next resistance point would be at the 135.60 area high from Thursday. And that's essentially just about $2, actually $1.50 off the 52-week highs on the spiders, which if we go to the daily chart, you can see a little bit more clearly. Here's your daily chart pivot high right here. This is the 2011 pivot high at 137.20. So again, we're right now about a little less than $2 away. If we got back to the highs from Thursday, we'd be about $1.50 away. And the markets just continue to grind higher. I mean, this has been an amazing move. It really has been. If you take a look at the low here put in on December 19th, ever since December 19th, this market's been up and away. I mean, you've had one or two down days along the way, but very, very minimal. Okay, the other chart that I think is even more extended is the Qs, which is the NASDAQ 100. Notice how the NASDAQ 100 has not hit the 20 moving average now in a total of 29 days. I went back and did some calculations, and in the last 3 years, the longest time the NASDAQ or the Qs has been away from the 20 moving average is 29 days. So think about that, folks. All right, think about that extended move. What it tells me, if I'm looking at the Qs chart here, is that most likely the Qs or the NASDAQ will start to sag a little bit, and that 20 will be tagged in the not-too-distant future. Again, you're now pushing the limits of, in the past 3 years or more, the longest period that it has not tagged the 20 moving average. So you got to assume, maybe another 5 trading days, maybe even another 10, but it's going to happen in the not-too-distant future. And just to tag it, I mean, it has to fall all the way back down to 61-ish, which would be a $2 fall on the Qs just to get to the 20 moving average right now. So I mean, you have to figure it takes a couple days even on pullback to get there anyways. Alright, so again, going back to the spiders chart, SPY, which mirrors the S&P 500, you can see again the extended move. You are into some good resistance here. You can see all these levels up here. And remember, if you do take out the pivot high here at 135, 60, which is this pivot high going back to July 7th, then the next major spot on the chart would be the 52-week high from 2011, obviously here at 137.20. Now, what I want to do next is just quickly go over a couple key charts out there that I want you guys to be watching. All right, so number one, what I want to do is we need to mention Apple. I'm sure everyone's talking about Apple. Obviously, they are in the media, but it is important we do talk about it because it is getting into a level where I'm comfortable taking some puts on it, buying some puts, or even possibly shorting the stock itself. What I told my members is let it pierce the even number of 500, and I said this ever since it was 450 bucks, folks. For the last 2+ weeks, 3+ weeks, I've said, listen, Apple had the best earnings of all. Let it go. If you're looking to short something, go find something else because Apple's the strongest player out there. I said let it get to 500. When it gets to 500 and pierces, if you then want to inch in a little bit of a small position on the short side, I don't have a problem with it. And sure enough, it's played out beautifully here. Again, if you go just back to this pivot low on, when was this? November 25th, you were at around $360 on Apple. It's now over 500 at 501 and change. But bottom line is this, extended chart, it's now above 500. The psychological 500 level has been hit. I do believe distribution is going to occur, and you're going to see a top in this in the next day or two. Most likely it will get to between 505 and 510. Anywhere in that range, I am comfortable being on the short side. Obviously a small position. We never go heavily on shorts like this when you're dealing with such a powerful stock like Apple. But a small short position I think is fine in that general range. Amazon, let's take a look at Amazon. In the weekend video, folks, for those of you that watched the free weekend video, I talked about the bullish flag pattern on Amazon here on the daily chart. Here you can see the earnings, which gapped it down, and then the 3-bar surge, then the consolidation. See this consolidation off the 3-bar surge, the up move here in the consolidation? That's bullish consolidation. You need to be able to read that if you're a trader. All right, and by reading that, what it tells you is Amazon's going to have another move up, and sure enough, today it's up over $5. I repeat, it's up over $5, so a beautiful call there. And note this, where's it headed? Right here. All right, see this gap fill at approximately 194 and change? That's the target. Okay, so again, and that, yeah, that 194.30. So it really has another $3 or so to go, in my opinion, before it hits resistance. But once it fills the gap, then you're going to look for a pullback on that. All right. Google is having a good day today as well, up $7. Google, little choppy consolidation. I don't really like the Google chart that much. I think there might be a little bit more upside, maybe to the lows here, which also match kind of up with the 50 moving average. But again, you can see how close it is already. So I'm not a big fan of this chart in terms of long. And at the same point, with the markets as strong as they are, folks, and again, you had a down day on Friday, but it's 100% negated today, just that easily. And by the way, the volume is so light today. I mean, they could close the market. You wouldn't notice any difference in terms of volume, basically. But bottom line is, again, it's tough to short a market when the volume is this light because they just keep on floating up day in, day out. All right, now a couple charts that are having big days out there. Priceline, big pop on Priceline. I was asked by a few of my members if it was a shorting opportunity. I don't think you can really short Priceline yet because you just had a pretty sizable breakout here. All right, see this? Pivot high, pivot high, pivot high, pivot high, and all these pivot highs along the way. That's a pretty impressive breakout possibility. Now, obviously, you're not looking to go long because it's already up 27 bucks today. But the point is, I wouldn't be shorting this. Not yet. Let it get more extended. Let it get, further high to the upside. My guess is it's heading towards $600 per share. Once it gets above 600, then might be the point to play it on in terms of a pullback. All right. Caterpillar today having a $1.80 run. Caterpillar, to me, if it gets to this top from 2011, I do believe that's a good shorting opportunity. Should be a very extended move at that point, and I think you can get a short off there on that chart. All right, CF, which I gave you guys last week, CF Industries is a short call, which worked out perfectly. And again, let me just refresh your memory here. On this chart, you had a beautiful double top tag last Wednesday and Thursday. Sure enough, the short was given there, and look at the pullback right to the 20 moving average. As you know, the 20 would be support here, and sure enough, you're getting a bounce today. So I believe that, again, any retrace you actually can short this. What I would do is I'd look for gap fill somewhere around the 186 level. All right, so 186 would be where I would be looking to short CF if it gets back to there. And I do think at some point it will break the 20 and go even lower. In my opinion, just analyzing the markets, let's go back to the SPY on an intraday basis again, which continues to be a powerhouse here, basically at the highs of the day, and continuing to float higher on extremely light volume. But looking at the markets themselves, I do believe you're obviously overbought. I only have a half position of STS right now, and that's about 5% of my total swing trade portfolio. The only reason I have that is just as a security, just in case we do have a crash type scenario in the markets. I'd like to make a little bit of money like that. But other than that, I haven't had the guts really to continue to step up and short this market. It just doesn't seem prudent at this point. Now, there will be a point where I will start, inching in a little bit more. But again, every single day, the markets sell off early and then float back to the highs later in the day, and if not, going even higher. And this is now repeated day in, day out, except for a few down, 1 or 2 down days in the last 6 weeks. There's no real reason to stick my neck out in a major way yet. I will at some point when the charts are telling me it's right, but till then, I will stick and play it safe and play my long plays on small caps, which I continue to make good money on, and keep looking for new long plays all the time, see if the charts match up perfectly. All right. Just a reminder to everyone out there, 7-day free trial to inthemoneystocks.com. If you want to learn the proprietary methods, if you want to get involved here, get swing trade alerts. As I take my swing trades, I give them to you guys. Come join us here at inthemoneystocks.com. Again, 7-day free trial to the Research Center for swing traders and to the intraday stock chat for day traders. Again, In the Money Stocks is the place to be. Join the elite, profit with the pros. Take care.